Welcome back to the Money Talks with Andy channel. This is Andy. Today I wanted to cover an extra income stream that I'm really excited to share with everyone. So it's actually how I make additional cash flow while potentially sitting on long-term holdings that I invest in with the stock market. So just a quick one before we jump into it. It's a disclaimer, I'm not a financial advisor. Nothing is a recommendation in this video. Do your own due diligence. Prices of stocks can go up as well as down, and you can lose more than you invest. It is very risky to invest in anything, so consult qualified professionals. And anything I discuss in this video is for entertainment and information purposes only. Don't do anything I do. So, why do I invest in the stock market? It's consistently gone up over time. The S&P 500 is the benchmark, and that is Standard & Poor's top 500 US companies. Standard & Poor is a ratings company. Now, it automatically gives me diversification across sectors, so I don't have to individually buy, the stocks or shares of individual companies. I can just invest in a fund that gives me broad access to multiple sectors. Now, it also gives me an additional stream of income, which is uncorrelated to my real estate investments. And this is quite important for me personally because I'm already invested in real estate. I don't need more of that. I'm actually looking for something to diversify away from that. Now, just a quick one on this. The stock market can go to zero. Anything can, so can real estate. You need to accept that. If you're investing, you need to accept that something might go to zero. Now, having said that, we've had world wars, pandemics, trade wars, cold wars, and the S&P 500 has continued to move higher. So I want to share a graph with you to demonstrate this. Now, this is the furthest I could get from tradingview.com. It's free, guys. You can go and check it out. Just tradingview.com. Plot a graph of SPX. This is the monthly chart. So if you take a look from 1872, it's pretty much just gone up. Yes, it's gone up and down. This is very normal. So there are years you might buy at the top and you might not see any movement for quite a few years. But if you hold it long enough, it will eventually go up. So even when I buy the top, I am going to generate income. And I'm going to show you how I do it personally. Right? So I use stock options for extra options, forgive the pun, but basically with stock options I'm able to generate additional income whilst buying stocks that I already want to own. Okay, I might buy the index through a fund or ETF, but I want to own these stocks. Okay, so stock options, the equivalent for real estate investors, is something similar to the lease option or some form of rent-to-own strategy. Okay, a stock option is a contract between a buyer and a seller, and the buyer has the right, but not the obligation, to exercise a contract, whilst the seller has the obligation to exercise the contract, to deliver on the contract, should the buyer choose to exercise their rights. So a typical contract might be a buyer of a call option. That buyer will have the right, but not the obligation, to buy 100 shares of a stock at the agreed strike price by a specific date. So the buyer can choose to exercise this at any time, okay, between now and the specific date when the option expires. And the seller will then have the obligation to sell their shares at the agreed strike price. So naturally, the buyer will have to pay a premium for this option, okay, for this contract, and the seller will be the collector. He will collect the premium. And this is basically how I made 3% in 28 days. Okay, so I bought 100 shares of a certain ETF. It could be a stock. And this is something I want to invest in for the long term. I will hold this for years to come. Okay, and this ETF was trading at 24.60. I bought 100. So my cost is 2,460. And within the hour, I sold a contract, so I'm now obligated to sell my shares at the strike price of 24.50. Now I know it's a little below what I paid for it, but bear with me. The premium I collect over here is $75. So effectively this brings down my cost base as well. Now the $75 has a date to expiration of 28 days. So within 28 days, I collect $75. My cost is 2,460. If you multiply that by 100, you get slightly over 3% for 28 days. If you annualize this or take a daily rate, the daily will work out to be 0.1% or an annualize of 39% a year. Now you definitely will make more money on doing this than you'll make in a bank account, just saving your cash in a bank account. Now this is called a covered call strategy, okay? And it's covered in the sense that I own 100 shares outright before I sell the stock option, okay? Now, do not do any of this unless you educate yourself and practice, okay? It can be very risky. Now, if all this sounds like gobbledygook to you, I'll break this down in the coming weeks and months so you can follow my journey and see how I generate an additional income stream on top of the cash flow I get from real estate. Now, a word of warning, prices can go up or down, okay? And this strategy is risky, so, like I say, educate yourself before doing anything. Having said that, you've seen yourself, the S&P 500 has gone up over time, but this is not guaranteed in the future. It could go to zero. It could go down. In fact, it currently is going down as we speak, and today is the 21st of September. So make sure you are able to satisfy any obligations that you need to if you're selling options. So the risk really can be exponential. So you could lose more than your initial capital. You definitely need to be very aware of the risks. Okay, so I hope you enjoyed this video. That's how I made 3% in 28 days. Give it a thumbs up if you enjoy the content. Drop any questions or comments you have. Let's get a discussion going. And don't forget, subscribe to the channel. Until next time, have a great day.